My base case is that we're going to enter a new, lower volatility, grindy upside bull market, particularly for Bitcoin, because the institutions, they invest like every quarter, a little bit, a little bit, a little bit, and that's just a different dynamic than we've had in the past, where it was what was the phrase, like a hot ball of money, right? It would roll in, it would roll out, and I don't think that's going to be the case in the future. When you add agentic finance and slashed rates and quantum risk going down, and stablecoin growth and tokenization growth and the Clarity Act being passed, it starts to be just too much news. It's too much good news. And so I think that those are the narratives on which we're going to exit this market.
Matt Hougan begins by confronting a familiar question in the crypto industry. What will ultimately pull the market out of its current winter? Rather than pointing to a single catalyst, he argues that Bitcoin's next major expansion will likely emerge from a powerful convergence of forces, ranging from institutional adoption and stablecoin growth to macroeconomic shifts and the continued evolution of digital financial infrastructure. Before we go on, please take a moment to like this video, subscribe to the channel, and turn on post notifications for more content like this. Every action helps with the YouTube algorithm and greatly supports the channel's growth. Thanks for your support and enjoy the video.
When we talk about the crypto winter, how are we going to get out of this period and what's going to pull us?
There's so many. So first of all, it's never one thing. You need like a lot. It's never, ever one thing. I think it'll be a lot of things. The narratives that are going to drag us out of this winter, I think the rise of agentic finance is actually a narrative that will drag us out of the winter. I think the rise of institutional DeFi, you're seeing Apollo building on Morpho, you're seeing BlackRock building on Uniswap, you're seeing Aave hit $1 trillion in lending. I think the growth of institutional DeFi will drag us out of this winter. I think the 4-year cycle will contribute to dragging us out of the winter, right? We're in the down year now. Next year is a good year. 4-year cycle seems intact. That will be helpful. I think Kevin Warsh, the new incoming Fed chair, is much more dovish than people think. I think he believes in the AI deflationary story. He's going to cut rates more than people think. I think that will be positive for us. I think we're going to make enough progress on quantum that the quantum risk will be diminished in people's minds. When you add agentic finance and slashed rates and quantum risk going down, and stablecoin growth and tokenization growth and the Clarity Act being passed, it starts to be just too much news. It's too much good news. And so I think that those are the narratives on which we're going to exit this market. My base case is that we're going to enter a new, lower volatility, grindy upside bull market, particularly for Bitcoin, because the institutions, they invest like every quarter, a little bit, a little bit, a little bit. And that's just a different dynamic than we've had in the past, where it was what was the phrase, like a hot ball of money, right? It would roll in, it would roll out. And I don't think that's going to be the case in the future.
The only reason we've seen an increase in the price of Bitcoin is because of the ETFs.
I think that's true, and that's something that we should think about. It could mean that sort of the retail money that drove previous crypto booms is just tapped. It's out. It didn't have any more firepower post FTX, post the meme. Like it was just done. It's just done, and that's possible. And the reason that that's important is the institutional money that's coming in, and it's still coming in, is slower, right? It's slower than the retail money. So what that would tell you is not that the cycle is over. It's just that the likely exit from this bear market will be slower and grindier than previous bear markets. Because the retail money maybe is tapped and it's fast. The new money coming in is slow. And it's just going to be slow and steady. It might be I think it's going to be a great bull market, but it might be a little boring compared to previous bull markets. I think there's a strong case to be made for the market undervaluing both ETH and Solana at this point, which are the dominant players in those two markets. I think the market is asking questions about L1 valuations and how they derive valuations. It will want answers to that, but I'm very bullish. Particularly, Ethereum sort of has Vitalik coming back into the community and becoming a major force there. I think that is a very positive narrative. It has a better technical roadmap that's shipping faster than it was in the past. I think that's a very positive narrative. And then it's the leading play on stablecoins and tokenization right now. And it's winning the majority of institutional mandates. I think that's a pretty great combination. I think Solana benefits from being a challenger in that same market. And I suspect people are going to buy a lot of both, is my guess. I think Bitcoin will recover. But it will be interesting to see whether, because the stablecoin and tokenization narrative is so strong and so positive, and there's so much positive news flow, that may be the catalyst that sort of drags us out of the market. Look, I think Bitcoin will bottom and ultimately be part of what moves us up. But I think there's space for some pretty strong moves on assets related to stablecoins and tokenization. So it'll be interesting to see. That there are two crypto markets right now. There's the institutional market, which is starting from zero and building an allocation. And then there's the rest of the crypto market. The 4-year cycle is known by the rest of the crypto market. And if you look at the data, what you'll see is starting, basically at the start of 2025, in December 2024, ETFs, which were institutional investors, were buying a lot of Bitcoin. But retail investors were selling a lot of Bitcoin. Like long-term holders were selling a lot of Bitcoin. They actually sold more Bitcoin. So they had already turned over. And the way you really know this is if you look at crypto assets that didn't have ETFs. So they didn't have institutional investors. They were just traditional retail. And that's everything but Bitcoin and ETH. They were down like 70% in 2025. Right, Avalanche, Sui, Aptos, all the alt L1s that didn't have any institutional purchases entered crypto winter January 1st, 2025 and sold off relentlessly, just straight painfully down. The same thing was happening in Bitcoin for retail holders, for traditional crypto holders. We just didn't notice it because institutions were piling money into the ETF. So my view is that like the traditional holders of crypto are already at the bottom. As you said, RSI, the most oversold ever. Crypto fear and greed, the lowest readings ever. They're already starting to come out of that crypto winter. And so I really don't think it was October. I think the data would suggest it started like January 1st or maybe when Trump took office or whatever, right around that period. It was just relentlessly down for everything but ETFs. And so, yeah, I think we're closer to the end of the winter than many people think.
A defining characteristic of the current crypto landscape is the arrival of institutional investors. Historically, crypto markets were dominated by retail traders and speculative capital. Money often flowed into the market rapidly during bull runs and exited just as quickly when sentiment shifted. Hougan describes this earlier dynamic as something akin to a hot ball of money, capital that rolled into the market aggressively during speculative mania and then disappeared just as quickly during downturns.
The thing about institutions is they don't have an allocation. So if you can imagine not owning Bitcoin and then you're looking at it and you're like, historically it's moved in these waves and cycles, there's no real reason to imagine that hasn't stopped. The people I talk to, my friends at the golf course, are all more interested in Bitcoin now than they were 4 years ago. This just looks like a classic bear market. So they are more excited about the pullback. They're more excited to buy at 66 than they were at 125. And they're not surprised that Bitcoin is volatile, right? Like, oh, Bitcoin is volatile? Yeah, we knew that. So when we go out and we meet with people, I was on the road in Miami 2 weeks ago, the people who hadn't allocated yet were starting to lick their chops. Now they wonder where the bottom is. Is it 66? Is it 60? Is it 55? They aren't like piling in, they're asking those questions, but they're licking their chops. The only negative that we have heard some questions about quantum. So that FUD has filtered into the institutional market. And then there's this question of why gold rallied and Bitcoin didn't, but that has such an easy answer that that's not a real objection. Quantum is a concern that has popped up. I think it's the case, whether people know it or not yet, I think it's the case that within a couple years, every single person is going to be interacting with stablecoin and tokenized assets. It's just going to be fait accompli. The same way people were like, I don't need email, or I don't need text, I don't need WhatsApp. And now, like, everybody's grandmother is using WhatsApp. I think that's going to be the same with stablecoins and tokenization. And to get to your point, the reason that's important is because that puts them into the digital asset ecosystem. And they are one click away from Bitcoin. And the idea of digital representations of wealth is no longer as foreign. So if you could imagine, if you could snap your fingers and everyone in the world would have a wallet, do you think that would be good for Bitcoin or bad for Bitcoin? Obviously, it would be good for Bitcoin because it gets people one step closer to owning Bitcoin, and it's a big step. And that's the world we're going to live in 2 years. So I know there's a lot of the Bitcoin community that's very skeptical of everything non-Bitcoin and think it's bad. And I understand that. There's been a lot of nonsense in the non-Bitcoin part of the world. But these forces, getting billions of people having wallets and interacting with digital assets every day, is going to trickle into Bitcoin in a significant way. People miss everything. If you talk to the average institutional investor, they've never heard of Chainlink. And if you say like the word oracle to them, they think of the Greek oracle of Delphi. They have no idea. So they don't know. So they're missing everything. The thesis I give them on Chainlink is, blockchains are going to increasingly interact with the real world. The only way they do that, basically, it's like 75% market share is through Chainlink. And that thesis really resonates. Like all of the information they need to gather, all the things they need to verify, all those things they need to audit, all the communication between this blockchain and that blockchain, which are like two islands that don't have a good bridge. Chainlink powers all of that. If Chainlink were a software company in a traditional C Corp wrapper, it would be one of the hottest tech plays in the market right now. Right? It would be as hot as Circle. How do you gain exposure to stablecoins and tokenization? You buy Circle and you buy Chainlink. The reason it's not is because it's a token and the tokenomics are evolving and that's complex. And so people don't take the time to understand it. But if you can get people to look beyond that or understand the wrinkles and look at the actual services, it's very intuitive, right? Oh, you need to connect this to the real world. The bridge is Chainlink. It's an obvious massive business and they're so dominant and Sergey is so good at explaining it. I think it will be one of the tokens that does really well. I do think that market eventually will be extraordinarily massive. And there's a nice circle to it that I think people overlook when they think about something like Ondo or something like Aave or other plays that deal with tokenization or debt or borrowing or access. Which is the more assets that are tokenized, whether it's through Ondo or other means, eventually the scale of DeFi grows at an exponential rate. I do think people miss that, right? People are really bullish on stablecoins and tokenization right now, and they're not concomitantly bullish on DeFi protocols. And I think they're missing the next step, right? Like it's like if you're bullish here, it's obvious to me that this is 100x bigger than it is today. And I don't think they're making that connection, but I think they will.
If someone is 25 years old at this point and is looking to get into the markets, what would you give them as advice as a starting point?
Well, first buy some crypto. And the reason
not meme coins.
Not meme coins, no. Look, if you're 25, you have such a long time frame. So from an investment perspective, most people will be better off buying a diversified basket of crypto index products and holding it forever. Like that's and so people should do that with much of their allocation. But if you're 25, I would also encourage you to take the time to learn about a few assets and fall in love with them and make unique investments into that space, because the learning that you'll do because you're following it closely will pay off dramatically over time. Crypto is like a 20-year explosive market. So if you want to go deep down the Chainlink rabbit hole and become a Link Marine and understand it and overweight it, I don't know, I'm bullish on Chainlink. Whether that will pay off or not, I'm not sure. But the process of doing that will pay off substantially. So I think that's actually the most important thing if you're 25 is to have enough skin in the game that you really care and are paying attention. And however you do that, would be great. My time horizon for investing and for what I do in my career is measured in decades. And I think even if you ask the most nervous person in crypto right now, what they think crypto will look like in a decade, they're very bullish. Do you think Bitcoin will be bigger in a decade? Yes. Do you think stablecoins will be massive in a decade? Yes. Do you think tokenization will be massive in a decade? Yes. And so that, because that's my time frame, it does seem like just noise. I've also had the benefit, as you have, of living full time through 2 previous crypto winners. And for sure, the first crypto winter is rough, right? I remember late 2018, early 2019, it was pretty sad in crypto land, right? And you had never experienced this kind of drawdowns, and you have to go back and study the fundamental thesis. Once you've had a few reps on that and you understand really the long-term drivers of crypto, it's easy to see they're still intact, and then this just comes as noise. So keep your eyes on the 10-year prize, not the 10-minute prize. And then, unfortunately, lived experience, having seen this before, the chaos rolls off your back. I tell people that, particularly in the beginning, the money you lose in the market is a tuition. It's, you can't learn if you don't try. And that doesn't mean put your life savings at risk, but having some skin in the game and learning hard lessons sometimes can really pay off over the long term if you iterate.
The next chapter of the crypto market may not resemble the explosive bull runs of the past. Instead, the industry appears to be transitioning into a more mature phase defined by institutional participation, technological infrastructure, and real-world financial integration. Multiple forces are converging at once: the growth of institutional DeFi, the expansion of stablecoins, the rise of tokenized assets, and the gradual entry of large financial institutions into digital asset markets.